Half an hour away from the Opens in Hong Kong, Shenzhen, and Shanghai. You're watching The China Show. I'm Yvonne Man with David Ingles.
All right, let's get to it. Our top stories today. Stocks across the region are rallying after President Trump announcing a trade deal with Japan, setting tariffs at 15% in exchange for market access for U.S. cars and agriculture.
Treasury Secretary Scott Bessent saying he'll meet next week with Chinese negotiators, expecting to extend their ongoing trade truce.
And the Philippine markets open this hour in focus, of course, as Manila strikes its own U.S. trade deal following President Marcos's visit to the White House.
And Bloomberg is told the U.S. Nuclear Weapons Agency was breached in a widespread hack that Microsoft is now blaming on groups backed by Beijing.
Welcome to the show. Hope you're all well. A lot of top stories to get through today, and you guys will be witnessing over the next 2 hours or so something special as it pertains to our ability to fit in everything into our rundowns today. Let's start things off and why markets are doing this, particularly in Tokyo, with the topics up 2.6%. Automakers in focus, double-digit gains across some. Toyota's up in the high single digits. Subaru's up almost 13%. This is really on the back of the trade deal that was announced from President Trump about an hour or so back. That leads us into the FX markets and what we're doing as far as dollar-yen is concerned. Philippine peso also in focus, given, of course, that specific trade deal. 20 to 19% is the tariff on Philippine goods going into the United States. Dollar peso is doing this. That, of course, cash market opens up this hour. Can we change the boards, please, if we can? The bond market's in focus, too. We have a 40-year bond auction today, which was supposed to be our top story. It could still be consequential for markets, but we'll get to that once we do have an indication of demand. Very quickly, China overnight session, a rally taking place there. Turnover, almost 1.9 trillion renminbi on Tuesday in the cash markets there. Shanghai Composite, 2.5-year high. We'll unpack the reawakening of the onshore markets in a moment. But as you can see, some stocks to watch, some sectors in focus amidst everything that's taking place across the news front here, Yvonne.
What a positive surprise this Japan trade deal seemed to be, right? We basically had to rip up our entire rundown this morning and rebuild it as we had our morning call this morning. Just given the fact that, yes, it was a lower tariff rate, which was unexpected. Also, the fact that this, sectoral tariffs, according to NHK, might also be lowered as well when it comes to autos, which has been a big choking point in these trade negotiations. And for markets, they're saying this is definitely good news, positive for stocks in particular, and even for Ishiba's future, right? That he's really tied this trade deal to his own future after that big setback in the upper house election.
I mean, there were questions whether or not this would happen because of what took place over the weekend. And I think this sets those questions now, and this answers those questions to a large extent. It's also worth pointing out, though, that most of the details that have come so far out of President Trump, and of course on the Japanese side, they've also mentioned they need to be paying a close attention. They need to read closer into the fine print of what actually was agreed on. But yes, there's Japan, there's the JGB auction, of course, there's the Fed conversation as well around the job security of Jay Powell, and this onshore market rally in China, among many other things that we're talking about today.
Yeah, there's so much talk about anti-involution, right? And the fact is that there are actually traders out there now. You mentioned in the swaps, right? They're starting to price in the possibility of China actually emerging out of deflation on the back of these industrial policies.
Yeah, I mean, what led the rally overnight, EVs, what's led the rally this week, platform companies, and when you take a bigger step back, solar stocks also catching a very strong bid overnight. Those are three sectors that have been in focus amidst intense price competition or the pushback against that. It's also worth pointing out, top of the next hour, we have a joint departmental briefing taking place in Beijing. So we'll see what that will bring us as far as news flow is concerned. We're called higher 0.3%. We're in the thick of earnings season as well. We can get to that in a moment. But yes, everything so far is leading possibly what this means for the bigger potential trade deal ahead, which is the one with China. On that note, the framework, can we use Japan? So President Trump says he has reached a trade deal with Japan. We'll be setting tariffs at 15% and see Washington's major Asian ally invest $550 billion in the U.S.
I just signed the largest trade deal in history. I think maybe the largest deal in history with Japan. We worked on it long and hard, and it's a great deal for everybody. I always say it has to be great for everybody. It's a great deal. a lot different from the deals in the past, I can tell you that.
And it is the auto sector that is definitely benefiting from this news here in Japan. You take a look at the likes of Subaru, Mazda now. We're actually up, limit up for that stock in Tokyo this morning. Obviously, the U.S. is one of their key markets as well. But even for Subaru, too, the U.S. is the main market for them, and we are seeing double-digit gains of 15% or higher there for some of these automakers here today. And so let's bring in our whole team, right? You have a Japan deal, you have a Philippine framework as well. Let's bring in our Asia Trade co-anchor Sherry An. She joins us from Tokyo. Our Manila reporter Cliff Harvey Venson and China correspondent Min Min Lo are all here. Sherry, I'll start with you. This seemed to be catching the market a bit by surprise. How positive is this news?
Yeah, we have seen the Japanese yen gain ground and reverse earlier losses. We're seeing JGB yields rising, and obviously stocks. You mentioned some of those automakers. You mentioned Subaru, for example, that has more than 70% of its global sales going to the United States. We had Mazda as well. Toyota also seeing its best day since August of last year. So markets are pretty impressed with the deal so far, but the details are still pretty scarce. What we've heard from President Trump, as we heard from him earlier, is that this would be a historic deal. What do we know so far? That it will be 15% on Japanese goods going into the United States. Domestic media, NHK, reporting that will include 15% tariffs on Japanese autos. That would be coming down from 25%. Those 25% tariffs were expected to have a $19 billion impact on major Japanese car makers. So that's a sigh of relief if we actually do get that confirmed. Prime Minister Ishiba coming out earlier today saying that even he needs to see the details of these agreements. So we're still watching out for that. We're also watching what happens to rice, because of course that's a very sensitive and symbolic sector here in Japan. And NHK also reporting that Japan is set to increase the import ratio of U.S. rice. Not necessarily talking about tariffs, because remember, if you bring down the tariff rate for rice, what is the competitive advantage of the U.S. could be a big question. So far, we know that, for example, last year, U.S. imports of rice were about 40% of total imports into Japan. So we'll be watching what this actually means when it comes to this very sensitive sector for the Japanese public. We also have some details about a $550 billion investment into the United States. And we heard from President Trump that will include a joint venture with Japan for the Alaska LNG project.
Sherry, how does he sell this now in Japan domestically as a win?
It is going to be a net positive for the Japanese economy. I talked about the impact on the auto sector, and the auto issue was a big one because when it comes to the Japanese trade surplus against the U.S., 80% of that included cars. So including cars in this deal, that could mean bringing U.S. cars into the U.S. Although that could be a concession, it could also be just good news for the broader economy. Of course, Prime Minister Ishiba, as you said, needs to sell this because he's also just suffered a historic defeat when it comes to the upper house election over the weekend. And he is now preparing to have discussions with opposition parties about other key issues domestically, like bringing down the sales tax at the moment. Whether that's a temporary or permanent reduction, of course, is a key question. Will he need to make more concessions? Cost of living was a big issue. Rice is a big part of that. We will wait for details when it comes to those rice imports from the U.S., but we know that rice prices are still higher, about 60% already from last year. So what the implications are for the broader Japanese economy, that's how Prime Minister Ishiba will try to sell this to the domestic public. But of course, given his historic defeat, I had heard from my colleagues, for example, Paul Jackson, saying that this could be the leverage that the Prime Minister has to keep his job because he's vowed to stay in power, despite the fact that he suffered this big defeat for his ruling LDP. Now that there's a trade deal, what will happen to the Prime Minister is a key question. The last three LDP leaders that have lost the upper house election have had to quit in the next 2 months.
We'll see how much time this buys him there on this, I guess you could say, success on this trade deal. I'm going to bring you in right now. So the good news continues, right? That we're hearing that Stockholm is the next meeting between Scott Bessent and his counterparts in China. What do we know so far?
Yeah, happening next week, Monday and Tuesday. And Scott Bessent has already signaled that he is, or at least the U.S. is likely to extend that deadline for the trade truce that is expiring on August 12th. We don't know if it's just going to be another 3-month extension or a longer term one. Certainly the atmosphere has been warming up recently between the two sides after China stepped up the shipments of rare earths to the United States, and the U.S. also rolled back some of these curbs, right, on things like ethane, jet engine parts, and of course those H20 NVIDIA chips to China. That was touted as a really big win in U.S.-China relations and really prompted whether or not there is going to be this grand bargain with China. And of course, question is, will it follow the template of what Japan has achieved, some sort of commitment in terms of investment from China? But of course, Scott Bessent also said that this time the talk is going to be broadening out to cover issues like China's purchase of this sanctioned oil from Russia and Iran. And again, it just shows you that the U.S. still has many other levers and excuses to place more tariffs on China, whether it's an end in itself or is it, a push to get China to do more to rein in Putin on his war in Ukraine. The other thing Scott Bessent mentioned that U.S. wants to see is China shift towards this consumer-driven economy. And already we're seeing China taking some concrete steps on that front, reining in those intense price competitions. So that could be another sort of positive signal. Whether or not the U.S. will use that as a justification to give China a little bit more slack when it comes to those tariffs, that's still to be determined.
All right. Futures are pointing to the extension of the Asia rally. Volumes in Tokyo are up 80% compared to the average. We're stronger as well on the Philippine peso. To Manila now, Cliff Benson is with us right now to talk us through the details of that separate agreement, Cliff, between Bongbong Marcos and President Trump. What do we know?
Hi, good morning, David. So the U.S. will impose 19% tariff on the Philippines. That is lower than the 20% announced earlier this month, but higher than the 17% that was announced in April. So President Marcos says that the Philippines, in exchange, will open the market for U.S. products such as cars, and at the same time, the Philippines will import more soy, wheat, and soy wheat products, as well as medicines from the United States. So, despite the slight reduction, the Philippine president considers this development as a significant achievement following his White House visit and meeting with President Donald Trump.
All right, Cliff, thank you for that wrap up there, Cliff Benson there. Also, our thanks to Sherry-Ann and Min Min Lo, our team. And it seems like, Dave, that we are really starting to get more of these trade deals being done before this August 1st deadline, which continues to be music to many investors' ears, right? Let's bring in Christy now, investment strategist at Franklin Templeton Institute. Christy, we're starting to get more frameworks, at least in this part of the world, on what these trade deals are going to look like with the U.S. How does that frame your investment strategy overall as we count down to the rest of the year now?
Hi, good morning. Yes, I think we've seen now the low-hanging fruit, which is the U.S.-Japan trade deal that's been plucked, right? So it also showcases that, when both countries wanted a deal as equally badly, and this was evidenced by, this U.S.-Japan talks being like the 8th or the 9th rounds before a deal actually came into materialization. So, this goes to show that, if that kind of premise will probably lead to a proper deal or at least a framework. So we have 15% tariffs and Japan promising to purchase $500 billion of U.S. goods, and Japan increasing access to American producers of cars, trucks, rice, and agri-products. That's what Trump is claiming. Now, the surprise as well is the 10 percentage point reduction from the original Liberation Day tariffs. So what it also means for markets is that we think that, this auto tariffs part is probably going to be a key swing factor or a key influence. It'll be interesting to see how EU auto tariffs will pan out, right? And Trump also striking a deal with the Philippines, 90% tariffs. Overall, this and more trade deals ahead. What this means for markets is that it reduces the risk of countries having to mention or impose retaliatory trade measures post-August 1st. And as we're also watching very closely is the deal with China before the August 12th deadline, and now we're talking about an extension. So there's still some time. And I think it essentially puts the risk on for markets in the meantime.
Well, in the meantime, Christy, let me pick up on that because, as you point out, markets are welcoming this news positively. If you take a step back, though, you notice the tariff levels have been creeping up, right? Japan's at 15%. Southeast Asia, we're closer to 20%. We weren't even at 10% 6 months ago. Do markets in 6 months' time look back at this time and say that was actually a negative for these markets?
Well, I think the markets have been pricing in some part of tariffs, right? So it's either between 10% or 20%. I think that's the kind of threshold and the range that markets are putting it. Of course, if you compare with, the base, which is very low single digit, then we are definitely worse off. But I think there is already the adjustments being put in markets in the premium in either share prices or bond yields that are pricing in some form of tariffs. Now, are we going to be worse off? Now, that remains to be seen because as we're looking at right now, it's the start of a trade deal. And the proof is in the pudding because whether or not this gets carried out, and I think that this U.S.-Japan trade deal, if you look at the promise of $500 billion worth of U.S. goods purchases from Japan, that is leverage, right? So at the end of the day, I think that will be a lot more negotiations, and the actual impact either on prices, on inflation, remains to be seen. But we're definitely worse off compared with low single digit, but we're not worse off. We're better off if it's below 20%.
All right, and you are still bullish on Japan. We'll get your take on that. That line that you're saying that Japan remains a compelling value play. Christy Tan there, investment strategist at Franklin Templeton Institute. She's staying with us. We're also counting down the opens of trade in Shanghai, Shenzhen, and Hong. We've talked about the futures have been indicated higher here. This A-share rally that seems to be getting a bit more mojo now. Your reference rate just crossing the Bloomberg as well, 714 this morning. This is the China Show.
Equity markets are on the front foot this morning. As you can see, U.S. futures in Asia is really being carried on its shoulders by the Nikkei in Japan. They're 2.5% following the trade deal that President Trump just announced.
Yeah, let's bring Christy Tan, investment strategist at Franklin Templeton Institute. And, your Japan call overall, Christy, you're saying, the market is still a good value play. Obviously, before this trade deal, you were already saying that. And despite all this kind of political uncertainty that's going on in the country. So what is the play on Japan now?
Well, we have been bullish on Japan for some time. And I think this is definitely holding up. And we have seen, I think, the political situation and also the tariff issues being a disruption. And but overall, I think the fundamentals in Japan remains, right? We're seeing reforms being maintained, and companies are delivering. And also the wage rises, although it's still negative real wage, but at least we're looking at wage increments that's happening. And inflation is a problem domestically, and I think with the political focus and priority by Ishiba now is probably the survival, right? And he has to address the domestic issues. So we do expect that. I think the main issue about Japan is, of course, the hurdle on debt and fiscal, right? And this is not common. This is not just in particular Japan, right? Everyone's facing that. I mean, 260% debt to GDP, of course, is big. But at this point in time, we do think that there are more positives, that fiscal issues are definitely a long-term issue that Japan has to deal with. But in the near term, the policy reforms, that corporate reforms that are taking place and inflation being tackled, these are some of the positives that we continue to see value in Japanese companies that are reporting positive earnings, and valuations are not as stretched as the others.
Well, others potentially, I'm not sure if you're alluding to, United States, right? The market's doing well, some stocks better than others. It's quite a narrow rally taking place. Are you concerned over valuations in the U.S.? Where do you think the S&P 500 is going to be this time next year?
That's a great question. So we do have a survey by our portfolio management analysts, and all nearly 500 of them. And the consensus is that the S&P 500 for this year will end around nearly just 56,000 and around 5,500, 5,900. Now there are reasons why we are more I would say conservative, for the rest of the year, for this year. But, the long-term medium run is still for the S&P 500 to head higher. Now, in the meantime, then, you've mentioned, right, valuation, right? So that's extended. So what's the game plan for the second half? We're looking at a correction, a consolidation, at least a healthy pullback sometime between August and October. We still have a few event risks ahead of us, right? And markets had strong run, right? So we're looking at rotation. And this rotation is bringing us to some other markets that could be quite interesting, underappreciated. And you're looking at China onshore markets that have been also doing pretty well only recently. So I think we are expecting that rotation to move out of U.S. equities, some of the overvalued ones, potentially into some of the better prospects type of, we're looking at companies with better balance sheets. And this is the earnings season, the second quarter earnings season.
Yeah.
It's looking quite decent. Well, the hurdle rate of 4% is pretty easy to beat. So we are looking at more positive earnings surprises, but it still is a well-extended markets in terms of valuation and pricing. So rotation and broadening of the markets. That's what we expect.
Christy, we hear you. Thank you so much. Christy Tan, investment strategist at Franklin Templeton Institute there for us. Going into the open today, let's call it 1% on the Hang Seng Index, and we are again higher on the Asia market. This rally is extending. More on that in a moment. You're watching The China Show. Good morning. All right, welcome back. The opening bell under 4 minutes away, and we are likely going to see a decent gap higher at the open here. Let's call it 1%. HS Tech, and of course, the onshore markets are also very much in focus today. Yeah, it's the auto sector, it's the tech sector, as you say, that's really driving this. And so we're leaning towards risk here this morning on the back of all these trade deals that we heard overnight as well. And this morning, NIO is up some 8% here, following what we saw the ADRs on the back of these kind of new product launches as well for the automaker. We have the open coming up next. This is Bloomberg. Welcome back. I think we're talking about trade deals. I'm not sure. Anyway, we are. So a couple of markets are opening up, mainland markets, Hong Kong in a couple of seconds, Philippines as well. One market that's been up and running 90 minutes now and really feeling the tailwinds from trade negotiations and a trade deal is Japan. 15% tariffs. That market's up substantially, 2-3%. Autos are up in double digits. We are looking to see whether or not that shows up in sort of semi-proxies within this Chinese market, which has been rallying as well of late. Yeah, it's two sort of things going on, right? Yes, there's more talks of talks in Stockholm between Scott Bessent and his Chinese counterpart next week, Monday, Tuesday, and they're talking about extending that August 12th deadline. So once again, that could be positive for the market. On the flip side, domestically, you're getting more of this theme of Chinese regulators trying to halt either excessive coal production or overcapacity that really is kind of
leading a lot of analysts to start pricing in the possibility of China getting out of deflation, right? You're starting to see that not just in some of these stocks, but some of the swaps, which we'll tell you a little bit more about. But yes, overall, that really leads to the A-share market really playing catch up to what we've been seeing in Hong Kong. We continue to see that. Dave has been talking about the turnover that we're seeing on the CSI 300, for example. That's basically past 1 trillion of the last few days as well. So we're up about a fifth of 1%. We'll continue to watch turnover here this morning. We're seeing, in terms of yields, are actually heading higher this morning in the bond market. But keep in mind what we're seeing in the commodity space. That continues to be kind of the hot spot here. Still seeing bid on copper, on steel. Iron ore, though, is taking a bit of a step back, but it's been a pretty ferocious rally, too, of late. And Shanghai crude is also higher this morning. We watched, of course, some of the big caps like CATL. That's also doing quite well here today. So things are looking pretty good. Hong Kong better, though, relatively speaking. We're up about 0.7% here right now. Same when it goes to H shares. HS Tech is seriously the one that we need to focus on here today, just given kind of we're leaning more towards the growth names. We're leaning towards the auto sector as well. UBS, as James Wang and his team have an interesting call, though. Be careful of the earnings season. And that may be a headwind here potentially for Hong Kong stocks, given what they're seeing, which could be potential downgrades. HIBOR and that rebound might actually also impact sentiment there as well. We'll get that call from Charlotte Yang joining us here a little bit later on. But today, the tech space is doing okay. Tencent, Baidu, Alibaba are in the green. Meituan and Xiaomi, though, are heading the opposite direction. Watching the auto space. So NIO is the big one. There you go. We're up 9%. We saw 10% gains in NIO overnight in the U.S. markets. There's a lot of confidence among analysts now about these product launches and the like. And Baidu as well, we're up some 4% there. So, it seems like overall things are looking good for the tech sector. CGS also upgraded that stock, NIO, by the way, to now imply a 32% increase, according to their latest price targets there of $48 is where they're thinking that stock could fly. Solar stocks as well. So we talk about anti-involution in the well, and really what is the beneficiaries of that? People say it's solar. That certainly is the key focus here, but we're not seeing that too much upside there for some of these stocks. It's a mixed bag overall. And coal stocks. So we talked about this. There's these inspections that have been launched in China to halt the excessive coal production. So the government may look at even closing coal mines producing above permitted levels as part of a crackdown on over mining, which is a big story that we've been tracking as well. That's why you're seeing some of these coal miners doing okay. This morning we're up about 1% for most of them. Dave.
Yeah, we're sticking with the hot and heat theme, of course, being produced by either solar or coal. And as you can see, these markets have been rather on fire. So this is as of the close. And, of course, we have to adjust for the opening today. So highest since 2022 already for the Shanghai Composite. That specific index has actually outperformed the rest. That's index constituency dependent, of course, as a function of that. We're now within 0.5% as I speak on the CSI 300 of taking out the the early November highs of 2024. And of course, as Yvonne is pointing out, on average, 1.5 trillion so far daily turnover onshore. That's total. In fact, on a chart that looks like that's coming up on your screens very shortly, as of the close yesterday, nearly 1.9 trillion was actually. So July has been almost as good as Feb, which followed the DeepSeek moment. So that's really starting to wake up as far as an indicator for markets. Now, on the other side of things, quite literally coming here to Hong Kong, we have a story that's out. We'll get to this in a moment with Charlotte, but the big number for you is 800 billion. That's the amount of net purchases across the Stock Connect into Hong Kong so far. Year to date, we're about 7 months in. And 880 was, of course, the full year total, which was at a record last year. So we're barely into the second half, and Yvonne, we're already seeing totals equaling what we saw for the entirety of 2024.
Yeah, and we still got 5 months to go. We'll see how this all plays out. For more on the rally and what we're seeing in the onshore markets as well, and offshore, let's bring in our Asia equities reporter, Charlotte Yang. She's with us. Tell us a bit more about the surge in these southbound flows. We've been talking about it for weeks now, but what's behind it, and how sustainable can it be?
Yeah, so we're talking about some very serious momentum here. Like Dave just said, 800 billion, that's just steps away from last year's a full year level and also a previous target. So what's really fueling it, onshore investors, they have been hunting for these quality companies listed in Hong Kong, particularly in the tech, internet sector, as well as those new consumption names. And also, and also at a time, when the domestic market is still underperforming relatively versus Hong Kong. And so CICC analysts are actually expecting this full full-year southbound inflows to exceed over 1 trillion Hong Kong dollars, even though the second half, the pace could be a bit slower, mostly because of those dry powder. There was last dry powder from mutual funds as well as insurance companies to buying. But the estimates looking at, mutual funds may add 100 billion Hong Kong dollars, and also insurance companies having another 200 billion Hong Kong dollars into Hong Kong.
There's a call from UBS and James Wang, who's come on the show a few times. I have to note that he's been wrong a couple of times. But anyway, just a caveat that he's been correct as well in some cases. Timing is very difficult here. James, we like you. Hong Kong stocks could feel the pressure because of earnings. What's the thesis?
Yeah, so UBS, they're seeing some near-term headwinds for Hong Kong market, particularly the earnings downside. They're seeing around 4% for the HSCEI consensus earnings downgrades. Because of those competitive pressure we're seeing in sectors such as food delivery, and also we could be seeing a slight rebound in the HIBOR that could be a headwind. Also, there's limited expectations for stimulus, but while the macroeconomy is still struggling. UBS, there's still overall positive view on Hong Kong and China markets, but their refreshed targets for for HSI and MSCI China, they're actually seeing less than 1% upside for HSI and also less than 4% for MSCI China through year end. So it's some cautious outlook there.
Charlotte, thank you so much. Charlotte Yang there, our Asia Equities reporter. Right, the other big story we've been tracking is this hack, Microsoft, and the details that, in fact, just emerged in the last, let's call it, 90 minutes or so. So Microsoft saying, well, the hack targeting its SharePoint software. Now, a source tells Bloomberg that the U.S. Nuclear Weapons Agency has been affected, with Microsoft earlier saying that Chinese state-sponsored groups were to blame for this. Annabelle Jewellers, a tech reporter, tech correspondent, here with us to take us through the details of what we know on the story here.
Yeah, well, I think you've sort of given the sort of headline here, which is that this is an agency that maybe could have been caught up in the hack. We're hearing this information from a source. So this is the Nuclear Weapons Agency. It sits underneath the Energy Department. The Energy Department has said that some of its systems were compromised, but they didn't directly respond to this one. That's why we're going along with our sources here. But in the case of this agency, so the NNSA, it's essentially responsible for making sure that US nuclear weapons are safe, that they're secure, and also that they're effective. So given that kind of information that they would have in terms of the capabilities and the stockpiles, there's obviously a lot of concern about the data that could have been compromised. What we understand is that no sensitive or classified information has been accessed, but we are still trying to understand the extent of the damage, given that this is extremely widespread, taking not just this agency, but other government groups in the US, like the Education Department, Florida's Department of Revenue, the Rhode Island General Assembly, governments in Europe, the Middle East. I mean, it's quite widespread. And as well, there's the links back to China with businesses as well, also said to have been hacked.
Yeah, they're pointing the finger on some of these state-sponsored hackers in China. What do we know on what went wrong, how this attack happened, and how widespread is it?
Yeah, well, the hack does seem to be widespread. We're still trying to understand the extent of the damage on it. The China hacker access, or that link to China, we can get to in a moment, but you're asking as well about how the compromise came about. So the software in question is Microsoft SharePoint, and this is essentially used for data management and storage. And so the way that you can access SharePoint is essentially either via the cloud, and that's the newer version and the newer way and more widely used, but there's also an older version for how you access, and that's through on-premise servers, and that's where the vulnerability seems to have happened. In terms of the groups that have been linked to this, so there's two in question in particular. There's Linen Typhoon and also Violet Typhoon. These are both hacking groups that are fairly well known. They have been linked directly to the Chinese government in the past. There's a third one as well that they call out in this statement here. You can see Storm-2603, also said to be based in China. China, for its part, has responded via its embassy in the US, and they're saying that they haven't got any link to this, and they've certainly strongly pushed back on the allegation as well. But still, Microsoft as a business is really trying to boost its credibility in this space, and they have made a sizable number of hires in the security space as well from the US government. We understand those executives are meeting with senior management on a weekly basis to try and make the software more resilient. But again, at Microsoft, it's ubiquitous. Essentially, it's software. It's used all around the world, and that does leave it open to vulnerabilities just based on the scale of its use.
Just because of where it is, really. Belle, thank you. Annabelle Jewellers there on the latest on this hack. We're getting more details now, Yvonne, on some of the lines coming through out of Japan here.
So this is local news, NHK, right? So we'll see if we can get this match. But they're hearing a little bit more details of this U.S.-Japan trade deal. So they agree on maintaining 50% tariffs when it comes to steel. So this is one of maybe the holding sort of where we think that have held, and maybe we haven't seen too much change there as well. Obviously, President Trump has been quite keen on keeping the steel industry quite competitive. We've seen that with the likes of that UK trade deal as well. So maybe they're holding holding firm here when it comes to steel. But then again, we'll see what impact that has on the market, because the fact if NHK is right about how auto tariffs have come down, that has been seen as a very, very big positive when it comes to some of these automakers overall.
Yeah. So far, the direction of travel seems to be favorable for markets. This has been a pattern, and I would imagine this will be the pattern that will follow across these markets this time of the day when we do have more details on trade coming through. We have a headline comes through, and then we understand ever so slowly, bit by bit, what the details are of anything that was announced. In Japan's case, that's the one today. Rebar futures in China, 0.2%. There's been rising for a separate story, the Magadan project, and of course everything else in between. Right, very quickly, about 11 minutes into the session, cash market in Manila, 0.4%, Philippine Composite, 20% to 19% tariffs overnight was what they agreed on with Bongbong Marcos and President Trump. President Bongbong Marcos and President Trump, of course, in the White House as well. Right before we all found out about the separate one, which is, of course, Japan. Plenty more ahead. This is Bloomberg. Right, welcome back. Chinese markets are on the front foot, 0.5%. In the Hong Kong market, CSI 300, 0.3%. So we're now within 0.4% of a level that we hit right before the U.S. elections back in November of last year. Then we cascaded lower. So above that, we're back to September 2024 levels. A quick glance at turnover. We've been tracking this as an indicator of market activity and market sentiment. We're now nearing 300 billion yuan in just the first 14 minutes of the session. So this market is really waking up in many ways here.
Yeah, it is. And, it continues to be a good news story when it comes to trade here as well. Also, on a flip side, what we're seeing domestically in China, right? The latest story really has been China now warning it may shut down coal mines guilty of exceeding production limits. And it's the latest sign that regulators are getting serious about reining in overcapacity across industries. Let's bring in Stephen Stepchinsky, who leads our Asia energy coverage. There is a bit of urgency in what we're hearing so far. How far are they going to go in really trying to curb some of the overproduction that we're seeing in the coal industry?
There is a very large coal glut in China at the moment. Coal production continuously has hit a record high year after year. Now, that's not necessarily down to the mines themselves. China has been pushing for energy security since Russia's invasion of Ukraine in 2022 sent energy prices surging around the world. It caused shortages in certain markets, and China wanted to avoid that. So they decided to really jump down and double down on production of domestic coal resources. Now, there are levels that these mines are supposed to be producing at. And as this has helped bring down prices of coal for Chinese miners, it's actually brought it down a little too much. Chinese domestic coal prices earlier this year hit the lowest level in about 4 years. It tested the lowest level since 2009. And when you're at such a low level, it is not beneficial for these these coal producers. They need to make better profits. And I think that's one of the things that China is looking at. Coal is a major industry for the economy, and shoring up prices, making sure that this oversupply it sort of goes away, will assist in pushing prices to a more reasonable level and thus also potentially creating better profits. Now, we're not sure exactly which mines will be shut. We're in the early days here. I think it could also be a situation where the government puts out this statement, which was reported in local media, and then maybe the mines just cooperate from there. Just the fear of any action from Beijing will push them to make sure that their production is curbed. But at the moment, we're likely going to see record levels of coal production this year. That likely won't change. But let's see what happens next year, especially as China is supposed to start reducing consumption of the fuel and peak emissions by the end of this decade.
Stephen, I'm sorry to put you on the spot here. We got a headline. I wonder if you could comment on this. And this is on Japan and tariffs and steel. The U.S. and Japan agreed to keep 50% tariff on steel and aluminum. That's according to the NHK. That headline doesn't mean anything without any context. I wonder, do you have any context here?
Yeah, the context, this has to be about Nippon Steel buying U.S. steel. So earlier this year, as part of the landmark deal for Nippon Steel to buy U.S. steel, Trump didn't want a company to come in and close their factories. They wanted the U.S. Steel, the name, this very historic company, to continue producing and actually expand production, and they wanted Nippon Steel to invest in the company. This was actually essentially part of what Tokyo thought as the trade deal, which we saw, they accomplished earlier today, according to Trump, that they were able to come to some sort of agreement. Now, the reason why Trump has tariffs on steels, they want to protect that steel industry. They don't want Nippon Steel closing factories, and they want to make sure that a lot of the steel is still produced in the United States. So I think that's why Japan, according to the NHK, would agree to such tariff. At the same time, Japan isn't really interested in selling more steel to the U.S. I think they really are, especially through Nippon Steel, they're focusing on developing that market domestically by investing in the production there. The U.S. has potentially enormous steel demand going into the future. With the transition to green energy, there will require more steel, as well as, if through the AI boom, building data centers and also more infrastructure for that will require materials as well. So there is a lot of potential demand, and Trump wants to make sure that demand is met with U.S. businesses and U.S. resources, something that it seems that the Japanese trade negotiators are fine with.
Stephen Stapczynski there. Thank you so much, sir, for that context. Sorry to put you on the spot. They're fantastic context there from Stephen Stapczynski there over in Singapore. We covered coal, and we ended up covering steel. Okay, now, speaking of Japan and the U.S., we now have confirmation coming through of Ishiba on the specific tariffs on cars, that they did strike the deal with the U.S. to cut car tariffs now to 15%, which was earlier reported. Markets had been rallying already, but yet that is now confirmation for you of about 15%. Now, speaking of tariffs on the U.S., let's pivot now and have a look at Europe and what it means for China. I know that's fairly complicated. So you have U.S. tariffs now forcing Europe to recalibrate how Europe then invests and those links with mainland China. Now, where Chinese companies once focused on buying infrastructure, things like ports, power grids, they're now actually building their own factories with the help of local state subsidies. Now, senior reporter James Mager is with us from Beijing to talk us through today's big take. James, what are the key lines here, James?
I think the first thing, and to take this back to Japan, Ursula von der Leyen, Antonio Costas are in Japan today, meeting with Prime Minister Ishiba. Then they're coming to China tomorrow to meet with President Xi Jinping and President Li Qiang. And so I think the first thing you'll be seeing today is the Europeans and the Japanese discussing how to deal with America. And then they'll be discussing how to deal with China. And then the European leaders will come here tomorrow to meet with President Xi and Premier Li and to really discuss the huge economic and trade issues that the European Union has with China right now. As our story today shows, there is an increasing amount of investment from China, from Chinese companies like CATL or BYD, that is going into European markets in Portugal and Hungary and Slovakia. But there is also a massive increase in Chinese exports going into Europe. The trade deficit, the trade surplus that China has with Europe is rising. And the Europeans are really not happy about that. They're not happy that European companies are selling less in China. They're not happy that European companies can't get access to government procurement in China. They're not happy that they feel themselves being shut out of markets, that the Chinese are blocking exports of rare earth magnets, even just temporarily, to Europe. And they see that more and more Chinese exports are coming into the market. And Chinese companies like BYD are coming into the market, building factories, and then are going to outcompete European car companies. So there's a lot of tension from the economic side that's going to be discussed tomorrow when those European leaders are here. Also, obviously, they're going to discuss the war in Ukraine. Europe obviously very unhappy that China has not condemned that invasion of Ukraine by Russia and continues to support Russia through trade.
And so what would be considered success then in this meeting? And what do you think are going to be the key kind of choking points and the issues on the table?
I think the expectation for success should be very, very low. The Europeans basically have said, well, there is not going to be any statement. We may reach some kind of, have some kind of agreement on climate change, but even that is looking dicey. Basically, the European leaders are coming here to lay out, again, to the Chinese leadership, all the ways in which they're unhappy, to put on the table again all the problems they have with what China is doing across the broad spectrum of the relationship. The most recent one is the rare earth export controls that were put in place in April. But even prior to that, the European leaders and European governments were very, very unhappy with the economic relations with China, trade relations with China, and they weren't seeing any improvement from that on the Chinese side. And honestly, the Chinese don't seem to really want to make any changes on those things. Basically, 2 or 3 years ago, the former European the foreign policy head, Josep Borrell, described the previous iteration of this summit as a dialogue of the deaf. And from everything we're hearing in the preparations for tomorrow, it sounds like it's going to be the same. The Europeans are going to come and they're going to say the same complaints they've had in the past, and the Chinese are going to come out with the same statements they've had in the past. And it doesn't seem like at this moment there is going to be any movement on either side.
Well, James, that last comment just now might go into answering this next question. How tense really are ties between the two sides here?
I mean, I think it's incredibly tense. There is, as I said at the beginning, there are just so many areas in which they are fundamentally opposed to each other. There are some areas like climate change where the Europeans and the Chinese both are much more positive, at least comparatively to the Americans, where they're actually trying to work together. But I think the reaction and the reception that Ursula von der Leyen and Antonio Costa are going to get in Japan today is going to really be very, very warm. They're talking about defense industrial cooperation. They're talking about doing some on climate change. They're talking about economic security. They're talking about the joint problems they have with China. And then they're going to come to China tomorrow, and the reaction or the welcome they get here is going to be very, very cold. And I think that kind of sums up how bad relations right now are between the European Union, many European countries in and of themselves, and the Chinese government.
James, great stuff. James Maker there, our senior reporter on our Big Take here this morning. Of course, you can read the full Big Take there on the terminal. Taking a look at some breaking lines that we're getting from the Prime Minister in Japan. So talking to the Japanese people, it seems, on trying to sell this deal, right? So they will increase the U.S. rice imports within the existing bracket, and the deal will not sacrifice Japanese agriculture at all. So, and there's something on chips too, Dave, that you've been tracking as well.
Yes. In fact, let me just go back to that as well. Yeah, so Ishiba said Japan will not be disadvantaged from any tariffs on chips. So it does seem, of course, they're not walking back, just to be clear. They're clarifying that many of the things they agreed on in the last few hours or so will be advantageous to Japan. Markets are reacting that way. Plenty more ahead. This is the China Show.
Welcome back to the China Show. A look at the CSI 300 a half hour into the session. It's a sunny day out in Shanghai. And yeah, we are seeing this equity rally continue, not just when it comes to onshore markets. We're talking about overall, right? You take a look at what Japan's doing, right? It's on fire. The Nikkei is up more than 2.5% here this morning on the back of this trade deal with the U.S. The Prime Minister Ishiba speaking to reporters once again and just clarifying what actually was agreed upon in this deal.
It's getting complicated because he's not answering questions on whether he will stay as Prime Minister. And we're getting a separate report earlier on that he might decide on his future in August. The reason that's important is because there were questions around them being able to deliver a treaty, which he's now defending as a good thing, which, when you look at markets, are treating it as a good thing. And then he's putting some context into what they've said. $500 billion investment into the U.S., number one. They won't be disadvantaged on chips, number two. Rice and cars, and they're bringing that down. The tariff on steel, for example, on the Nippon steel deal. So a lot of these things are complicated, but yeah, he's bringing them into very domestically focused political context, but markets are, I guess, on our screens right now. In fact, I believe these are at session highs there on the Nikkei, 80% heavier on volumes for this time of the day.
I would think the biggest standout in this deal is what Ishiba just confirmed, right? The auto tariffs. That has been lowered from 25% initially discussed to 15%.
Yeah.
25% would have been a pain for a lot of these automakers that do export significantly to the U.S. 15%, I wonder how reasonable that is for the likes of the Subarus of the world, but we certainly have seen the auto sector really liking this news that this trade deal has been put in place. The steel thing is interesting, right? Stephen Techinski mentioned this to us, that this is maybe part of the whole Nippon Steel deal, that maybe, for him to actually approve this merger, you have to keep those steel tariffs at 50%.
Yeah, and that's, I guess, now the qualifier of why that deal does now make sense to be able to ensure that the U.S. interests are protected as far as that specific deal is concerned. Again, all of these things maybe don't make sense without context, but yes, we're trying to put everything together for you. It's a bit confusing, but yes. So there's that. We're also looking at, one of the big stories we were going to talk about today was this 40-year bond auction, but we'll set that aside for now. That's really not. But just to mention, we should get more information on 40-year bond auction in about 90 minutes or so. What does this mean for trade talks, which the other news overnight was we're looking at Stockholm next week, of course, for China and the U.S. there.
Yeah, they're choosing very interesting European countries to meet, right? Geneva, London, and now Stockholm.
Yeah.
You got to wonder,
Tuesday,
they're beautiful places. Maybe that's when you can get some good vibes. Because Besson did mention, right, it is actually good vibes leading up to it because his intention, it seems, is that they're going to work on some extension, right? That maybe August 12th for China is not set in stone just yet, too.
Not yet. Markets liking this because we are getting progress on trade. Arguably, looking at the tariff levels that have been announced, not the worst case scenario, but certainly higher than the base case this time last year without the tariff conversation. In fact, what we know so far, here's what's been announced and agreed on so far. So we're waiting for a few big things, of course. China's not in there. We'll talk about China maybe later on. India, not just yet. That's a little bit more complicated. I think when you talk about access to the car market, we talk about Japan being complicated. India's a bit more complicated, arguably, as far as that's concerned. But yeah, here are some of this is now the new normal as it pertains to trade. Are these restrictive as far as trade relationships are concerned? Who knows? Right. Just very, very quickly here, let's have a look at markets and where we are. So we're doing quite well across the benchmark. MSCI Asia Pacific is up. That's because of what's taking place in Japan. Mark Cranfield is with us right now to give us more context on whether or not, Mark, this rally has legs, or is this simply repositioning as we've ever so slowly receded back from the brink?
Well, if you look at Japan in particular, obviously the driver today is the transportation sub-index. And there could be plenty of upside there because a 15% tariff on Japanese autos is a huge relief to investors. They thought it was going to be a lot worse than that. And if you think of a company like Toyota Motor is the biggest component in the Topix index. Even after today's very big rally, and it's up more than 10% today, it is still underwater for the year to date. So if global investors are looking for a catch-up trade, look no further than Japanese car makers because there is plenty of room for those kind of companies to catch up with the big stocks around the world. And Japan, of course, the Topix index in particular has lagged behind the performance of Korea, Hong Kong, China, most of the major indices in Asia. So there's lots of room as you look ahead to the rest of the second half of the year. There's lots of room here for people that have been staying out of Japan waiting for this trade deal. This is looking like a great chance for them to get in, maybe to reduce exposure to some of the markets which have done really well in the first half of the year and start to move allocations back towards Japan. This could well be a turning point for Japanese stocks into the second half, and there's plenty of room for them to go.
What's happening in the JGB market, right? We're seeing a little bit of a melt up in yields now. Mark, what's the thinking behind that among the bond traders now, ahead of this 40-year bond auction, of course?
It's all about the Bank of Japan. So what has changed significantly, the Bank of Japan has repeatedly been saying that unless there was a trade deal, they weren't going to consider raising interest rates again. Now we have a trade deal and we have a Bank of Japan meeting next week. Suddenly, the whole yield curve is jumping. And most significantly, where you've seen today the 2-year yield has jumped into an area where it is fully pricing a 25 basis point hike for next week. That changes the dynamics completely, and you can see also the turnaround in the yen is partly a fact of these short-term yields jumping. The long end of the curve is a whole nother story, and that's the 40-year auction. That's dicey enough. But what has changed today is what happened at the short end of the curve. Now, the Bank of Japan probably isn't going to raise interest rates next week. It's probably already decided it needs more time to look at the trade deal. But there is one. And now it's going to really raise the odds for September or October. Suddenly, traders are much more serious about the possibility of higher interest rates in Japan sooner rather than later, at the same time as people keep on talking about the chance that the Federal Reserve will lower interest rates before too long. You put those two together, it's negative for the dollar, it's positive for the yen. This dollar-yen move could have quite a way to go yet.
Yeah, we're certainly seeing the 2-year as well moving, as you say. Mark, thank you so much for covering all things Japan for us this morning. Mark Cranfield, our Bloomberg MI strategist. He also talked about that carry trade in the yen. That's still very much intact right now, that trade. Beyond that, we're taking a look at these Japan autos, right? Because it seems like the big sort of highlight in this U.S.-Japan trade deal, which the Prime Minister Ishiba did confirm in just the last couple of minutes, that it looks like to be a 15% tariff on automobiles imported from Japan. That is confirming earlier local reports as well. That's why you're seeing double-digit gains for the likes of Toyota, Subaru this morning. For more, let's bring in our senior editor, Reed Stevenson, for more. You know, Reed, before this, they were bracing for a 25% tariff, which would have been brutal. What does 15% mean for the auto sector now for Japan?
Yeah, I mean, this is a classic relief rally. I mean, everyone had sort of worked under the assumption that we were going to see a 25% tariff. The stock, prices of various car makers had priced that in. I mean, depends on the car maker when you talk about the actual impact. It seems like Toyota has already been preparing for some level of tariffs and has. There are even reports that it's been lowering some of its prices in advance of something like this. Whereas, for example, other car makers, Nissan and Honda, which actually have manufacturing capacity in the U.S., they've already been shifting production over there in anticipation of this. And so, look, they're all going to have to weather this storm, and what remains to be seen is whether it continues beyond the Trump administration.
Right. Who does this benefit the most? Markets are trying to figure. I mean, it's certainly good for the sector. Some of the names that have been floated with the most exposure to the U.S., names like Subaru, for example, Reed. Do we have to distinguish, or does this, float all boats, as they say?
Yeah, I mean, benefit, from what level, right? I mean, essentially, who's least hurt, I guess, in this instance. I mean, Subaru certainly is very reliant on the U.S. for a lot of its sales, so they're probably going to see a large hit. In aggregate, we were looking at, a hit of about $19 billion for all of Japan's car makers combined. I mean, Toyota, just by sheer scale, is going to make up the largest chunk of that. As we know, Nissan has its own sort of internal issues around management and just, an aging model lineup in addition to the tariff situation. Honda is a little bit behind on its EV strategy. That may be, somewhat of a relief, actually. And so really, it really depends on which car maker you're looking at. But look, Japan's car makers have been through many storms in the past, including, the huge rally in the yen, almost 30 years ago. And so really, they're just sort of adjusting here and shifting production to where it makes sense, and then of course we're just going to have to see how all of this shakes out. But for now, we're looking at a relief rally, as you saw with the share gains this morning.
Reed, there's a price tag, right? $550 billion of investment into the U.S. I'm just wondering, what part of that is going to be from the auto sector in particular? Are automakers in Japan serious now about possibly moving manufacturing to the U.S.?
Well, look, they've been doing that for decades now. I mean, there's this report of an LNG deal up in Alaska. That's certainly part of the 550 billion figure. I'm sure there are a lot of other components there. But look, it's a big figure that's meant to grab headlines, and so to a certain extent, it looks like it's doing its trick.
Right, Reed, thank you so much. Reed Stevenson, our senior editor there in Tokyo. Really important context. It's good, relatively speaking. There we go. Okay, we have some big guests coming up on your screens shortly. Scott Bessent, U.S. Treasury Secretary, and Commerce Secretary Howard Lutnick, of course, will be joining Bloomberg Surveillance later tonight. If you're in Asia, of course, watch at those times. On your screens here in the Asia Pacific, that is, of course, Wednesday morning in the United States.
Yeah, certainly there's going to be a lot to talk to him about, not just about this Japan trade deal, the talks in Stockholm with China next week as well. And, of course, Bessent talking about he sees no need right now to try to fire Jay Powell. Certainly there's a lot going on as well. We're going to add more coming up with Sean Stein from the U.S.-China Business Council, the president there, joining us more on how tariffs, industrial policy, and geopolitics are reshaping the business landscape for American companies operating in China. This is Bloomberg. Well, U.S. Treasury Secretary Scott Bessent says he will meet his Chinese counterparts in Stockholm next week for talks aimed at extending a tariff truce. But despite the pause in hostilities, the U.S.-China Business Council has found that a record share of U.S. firms froze their investments in China this year as trade ties worsen. Joining us from Hong Kong is the group's president, Sean Stein. Sean, it's great to have you. I know you're on your way to China to meet with some of your members there and the like. First and foremost, though, before we get to the survey, there's talks that are going to be going on in Sweden between U.S. and China next week. We're hearing that more of these trade deals that the U.S. is really kind of coming up with Asia, and before that August 1st deadline. It seems like things are materializing right now. What is sentiment on the ground like, and what are conversations with your members now about what's to come?
Yeah, I think the members, and I think business in general, is very pleased to see that we've got talks coming up next week. One of the real problems that we've had is neither side really understands the other side very well. And there hasn't really, and there still isn't really a working mechanism for the two sides to have regular ongoing communication. So these high-level talks are really important. So businesses are optimistic that this could lead to a continued sort of easing in the tension between the two countries. If we look at the previous meetings, we were in the middle of the trade war when they went into Geneva. And in Geneva, they negotiated sort of a truce on the ever-escalating tariffs, and the tariffs then came down. But then we had a new front in the trade war, and that front in the trade war was export controls. And then in London, the export controls started to come down. And so our hope is that now that we've got sort of a truce or a ceasefire on export controls and on tariffs, that we can now get into the more important conversations about market access and about the other types of things that hold back American companies from competing in China. So business is very optimistic and very pleased to hear about the meetings that are coming next week.
Sean, David here. The direction of travel seems to be clear. There's the issue, though, of a deadline that's coming up, and I wonder if your members are assuming that we will get a trade deal before the deadline. If we don't, what are some of the plan Bs that some of the members are putting in place in case we don't get clarity before that deadline?
Yeah, I think it goes without saying there's going to be a deal. There has to be a deal. And for a couple of reasons. The first is, the president himself tweeted on June 9th. He said, we have come to an agreement, between the two countries, and now we're waiting for it to be signed off by me, President Trump, and by President Xi. A couple of weeks later, we had the president come out and announce, we have a deal, we have a framework deal. And so to now go back and say, we had a deal, but we don't really have a deal, seems like a very unlikely outcome. So by far, the most likely outcome that everyone is seeing is a continuation of where we are now after August 12th. But there's another part that I think doesn't get as much coverage as particularly on the U.S. side, and that's China's reaction and what China's expectations are. I've spoken to a number of Chinese officials who say that, it's sort of a bit of a fallacy to assume that the only person who decides whether the deal gets extended or not is on one side of the Pacific, but that both sides of the Pacific are going to be involved in this decision. And so they will say, what's the alternative? If we don't have a deal, then we don't have a deal. And then what? We go back to Geneva, or we go back to pre-Geneva, which is something that both sides would find unthinkable. So I think everyone's prediction is that and life will continue as much as it has. But you ask how companies are sort of hedging. Large companies aren't. Large companies are, by and large, assuming that it's going to continue on August 12th. And so they're dealing with other more challenging issues like, what are we doing about the tariffs? The real problem is for the SMEs. The SMEs are where the real problem is because they don't have the financing and the funding that might be available to a larger company. So what we've seen is we saw that SMEs, and there are huge numbers of them. Remember, we've got, thousands and thousands of SMEs that are dependent on imports from China. What they had to do was, we talked about a 90-day deal, that came out of Geneva. They saw that as a 60-day deal. They realized they had 60 days to get goods on the water to make sure that they beat some sort of change in tariffs. So that's where we're seeing the reaction is in SMEs. The larger companies are mostly continuing with the expectation that things will continue as they have been.
Right, and I guess a good example that we've talked about in recent weeks here in the show is NVIDIA and, of course, H20 chips. Speaking of market access, Sean, you seem very confident that we will be getting a deal based on, I think, the rhetoric coming from the White House. In terms of specific deals on market access, Sean, what do you think we will see? What is a realistic expectation to have?
So right now, the biggest impediment actually to market access deals under the current framework is the fentanyl tariffs. Right now, we've got 30% tariffs on China, plus what we got during Trump 1.0. Of that 30%, 20% are the fentanyl-related tariffs. But we can't just look at that in isolation as what does that mean for imports into the U.S. market. When the U.S. imposed those tariffs on China, China imposed retaliatory tariffs. And those tariffs are affecting some very important sectors in the United States. It's affecting large displacement automobiles, big exports for certain U.S. companies. It's affecting energy exports, and it's affecting agricultural exports. And so what that means is it means that the key to getting further progress and to actually getting not one giant deal to move forward, but getting a lot of the small deals that the president seems to like is the key, is getting fentanyl tariffs down. So that's where we're the most optimistic. You would have noted that about 3 weeks ago, China took action to restrict the sale of two very critical precursors for fentanyl. And so we understand on the U.S. side, the United States is monitoring that now to see what is the actual effect on fentanyl supply in the U.S. How is that affecting the availability of precursors to various cartels? And what's happening, say, to the street price of fentanyl and the other measures that you have. So really where business is seeing the biggest opportunity for a breakthrough is progress on fentanyl that then lowers tariffs on the U.S. side, which then opens the door for China to lower tariffs that lets us sell agriculture, lets us sell airplanes, lets us sell automobiles, that lets us sell energy. So I think that's the area that's most ripe for progress and the area that's most ripe for the deal. And again, those are the kind of deals that will be very important for the president to be able to announce. Agriculture purchases for the Midwest, et cetera.
Sean, hold on that thought for a second. We just have some breaking news that's crossing here. This is local news, Mainichi, out of Japan. And they are now reporting that the Prime Minister Ishiba will announce his resignation by the end of August. So that is what they're reporting here right now. We did hear from Ishiba just a few moments ago talking about this trade deal that's been set with the U.S. and avoiding those questions of whether he was going to stay in power or not. There's been multiple reports saying that, his future is really determined by this trade deal. And maybe by August, he would have more of an indication of where he is going to be. So Mainichi now, let's keep in mind, it's still local reporting, said that the Prime Minister Ishiba is going to be resigning by the end of next month.
Okay, I'm looking at market reaction. Markets are looking at this development positively. Nikkei 225, you look at the line chart, there's an incremental leg higher on the Nikkei. There's also weakness coming through separately in the Japanese currency, which you see on your screen. So we've taken out earlier on the 147 handle. We're a little bit below that, at about that level as we speak. the Nikkei 225 heading into its lunch break 8 minutes from now is actually gaining even further right now. We're up about a couple of more points from when before the news broke. So we're now about 3% higher on the Nikkei here.
Yeah, I mean, does it eliminate the political uncertainty, I guess, when it comes to Japan? Maybe that's what's being taken out of this market here right now. But certainly, I guess it was sort of his goal, maybe, that to try to get this U.S. trade deal in place first. That bought him a bit of time here. We'll see if this is correct, though. Of course, still a lot of speculation, just reporting internally or locally here right now. But yes, as Japanese markets are actually rallying on this news. Sean, I'll bring it back to you and U.S. and China, whether we could bring a segue back into this. I thought it was very interesting in your survey with members, not just talking about the tariff threats, but also what's been going on domestically in China. This whole anti-involution sort of theme, where regulators are now really trying to crack down over capacity, subsidies that are being putting in some parts of the economy. How is that impacting U.S. companies that are operating in the mainland now?
Yeah, that's a really important point, because so much of the oxygen has been taken up by discussions of tariffs and export controls that we've gotten in many cases away from the really core issues that help prevent American companies and other global companies from being as competitive as they could be in China. And so the first thing that we're seeing is that we have fully 66% of companies who are telling us that their Chinese competitors are receiving benefits of different types from the Chinese government. Maybe it's discounted loans, maybe it's free land, maybe it's construction, maybe it's other things. But what's the impact of that 66% is we're now seeing that almost everyone across the board is seeing deflation in their sector. We're seeing, and companies that haven't yet seen deflation in their sector believe that they're going to start seeing deflation in their sector in the very near future. But the upshot of all of this isn't just what it means for the China market, isn't just what it means for declining sort of profitability and the ability to sell in the China market. What I think is even more worrying is that we have over 40% of our member companies say that the problem of Chinese industrial policy isn't just limited to China, but that over the next 5 years, they believe that it's going to affect their competitiveness in global markets. And so what we have then is we have international effects and spillover from Chinese overcapacity and Chinese subsidies and other programs that China has to support their own businesses. So in China, we get deflation, we get lower competitiveness, and we get new Chinese companies that are able to grow, partly due to their own innovation, partly to their own work, but partly also due to subsidies. But increasingly, this is going to become a problem globally as companies from around the world are fighting for market share in third country markets.
Sean, thank you so much for joining us. Sean Stein, their president at U.S.-China Business Council, and have a great trip to China as well. As we were just talking about here, we got to switch it back to Japan because the markets are moving now on this report from Mainichi that we might not have a prime minister in Japan in a few weeks' time.
And August is when the timing of when this report is citing that the plans to resign. In terms of market reaction, it's worth noting that we are going into the Japanese lunch break, so inopportune time really, but we'll get futures up and running. As far as the currency markets goes, the yen is down against the dollar. It's down against most of its peers as well. That's number one. Nikkei is seeing a little bit of a leg higher following the news that's come out, but also we're looking at that Nikkei vol index is actually seeing a substantial leg higher, also on the back of this news. We'll be live out of Tokyo coming through as we go into this lunch break. Yeah, go ahead, Yvonne.
As the trade negotiator is speaking this hour, talking about this U.S. and Japan trade deal, they're saying mutually beneficial, does not include steel and aluminum, though. Plenty more ahead. This is Bloomberg. All right, 11:29 a.m. in Tokyo. We joke about this is now becoming the Japan show. It certainly is, just given the news that we've been getting here in the last few minutes. Nikkei 225 is up more than 3%. On this news, reports of Mainichi that the Prime Minister Ishiba will announce his resignation by the end of this month. This is on the back, of course, the U.S. and Japan coming on and agreeing to that trade deal, Dave. Yeah,
there we go. Yen crosses too. So the yen is weaker. We've now taken out 147. Session highs on dollar yen thereabouts. There's a lot of trade going on. In fact, the bid-ask on this is getting extremely, extremely tight. Euro-yen now trading at 172.63. The yen is also weaker against most of its other major peers. Let's bring in Sherry on, our co-anchor, of course. She's in Tokyo for us, covering initially what was a trade conversation, Sherry, that's now morphed into something political. What could be the implications of this, Sherry?
It's an interesting development, right? Because coming into the headlines from the trade negotiations with the United States, there was some speculation that what does that mean for Prime Minister Ishiba? Because he just suffered that historic defeat in the upper house election when the LDP now is set to govern without both chambers of the legislative branch. And we haven't seen that happen, them having not a majority since the party founding. So, the continuation of trade negotiations with the U.S. was seen as one reason why Prime Minister Ishiba was vowing to stay on as leader. But now local media reporting that he will actually resign by the end of the month. So what that means for the next leadership here in Japan is a key question, because we have seen, of course, before Prime Minister Shinzo Abe, this revolving door of prime ministers that have ruled only by about a year or so. And could we see a repeat of that? And who could be the biggest candidates right now to replace him will be a key question when the ruling LDP now faces many different challenges, including having lost the upper house majority, concessions to smaller opposition parties that have asked everything from really lowering the sales tax at this point, more fiscal spending, what that means for the markets, especially JGBs. Remember, we do have that 40-year auction coming out in just less than an hour. So will we see the increasing pressure on the long end of sovereign debt here in Japan will be a question for markets going forward.
Yeah, it's why we've seen maybe this melt up in yields once again as well. We're getting into this, getting more confirmations, I guess, from the Japan side of what really came through in this trade deal. Akazawa, the trade negotiator, is still speaking and talking a little bit more about the breakdown that, yes, steel, aluminum tariffs seem to be still in place, confirming at least auto tariffs are coming down to 15%. And they're saying it's mutually beneficial, this trade deal. How are they going to sell this to Japan right now, Sherry?
Overall, when it comes to the net impact of lower tariffs, this is expected to be better than the 25% that was threatened on Japan. So policymakers will be able to sell this to the Japanese public as actually being beneficial for the economy, better at least than the 25% tariffs originally planned, better than the 24% tariffs that were initially threatened as well. 15% tariffs on Japanese cars, though, that's still higher than the existing 2.5% rate. But everything to do with trade negotiations and tariffs is relative, right? So the fact that the tariffs on Japanese cars came down, what happens to the 25% tariffs on South Korean cars will be a key question. If you can have that relative advantage, that's another way to be able to sell this deal to the Japanese public. Of course, very important because this auto sector is very important for the Japanese economy. It generates about 10% of Japan's GDP. It employs more than 5 million people. That's about 8% of the Japanese workforce. We have seen, of course, the immediate reaction from car makers from the likes of Toyota, from the likes of Subaru. Toyota, that sells about 20% of its global sales, come from the U.S. Subaru, more than 70% as well. President Trump has talked about opening the country, opening Japan to U.S. car imports. We'll have to continue to watch that because we've talked extensively about how American cars may not necessarily be appealing for the Japanese public. So even opening that market, what that could potentially mean. We'll continue to watch what the developments are around, Yvonne, as you said, the aluminum and steel tariffs. But of course, those sectoral tariffs are in place for other countries as well.
All right, Sherry, thank you, Sherry, on there. We rushed her back to the studio just to get through all this breaking news. And we're rushing William Chou as well, Hudson Institute's Japan Chair Deputy Director. William, it's great to have you on the program. Thanks so much for joining us here on such a last-minute request. But the news reports of Ishiba resigning by the end of next month, What's your take on all this? Obviously he's been dealing with a lot of pushback for him to resign. It seems like he was waiting at least to get this trade deal through first. What would this mean overall for Japan now?
Yeah, I think certainly I think this is sort of a major action that he decides to sort of push through. I know that we're still waiting for more details on the trade deal, but certainly issues about market access on rice and other agricultural products, that certainly will elicit reaction from Japanese voters, especially within the LDP, which is so dependent on the agricultural vote. And so I think what this means is that we're sort of entering a period of speculation as to who's going to be the next leader. There are a number of possible internal candidates, such as Hayashi or and also Finance Minister Kato. But there's also the possibility of maybe the LDP and Komeito working with other coalition partners and selecting a leader out of there. Right now, there's just a lot of speculation.
Right. William, David here, and just maybe a follow there to what we're still speculating, as you point out, right? So can we still assume, though, that it will be the LDP that is at the forefront here?
I have to admit, this is really hard to say, right? Especially given the what's been going on with Japanese politics. But I think my best guess is that it will still remain in the LDP. It will still be an LDP leader who replaces Prime Minister Ishiba, but I do think that there is a window where there might be other possibilities. But my best, if I were a betting man, which I'm not, my best bet is that it will be a LDP leader as a way to sort of ensure that there's some kind of continuity with the obviously this important trade deal, as well as to really, frankly, just to calm things down a little bit. Because I think, to be very frank, I think Japan is entering a sort of election fatigue between both leadership as well as parliamentary elections. And I think some kind of stability would be desirable.
William, markets are taking this trade deal very positively right now, right? It is one of the lowest sort of tariff rates we've seen in some of the major nations that does trade with the U.S. How big of a win do you think this is going to be for Japan?
I think this is a really significant win for Japan. If you take the reality that the Trump administration always was going to insist upon a 10% baseline tariff, as well as frameworks for long-term market access to ensure long-term pathway towards trade balances instead of trade deficits. I think given those existing circumstances, Japan did quite well in terms of lowering the reciprocal trade tariff down to 15%, as well as to lower the automotive tariff from 25% down to 15%. I think these are both significant developments for Japan. Obviously, we're still waiting on more details in terms of what exactly does market access constitute, as well as the sectoral tariffs on other things like steel and aluminum, as well as semiconductors. But I think for now, I think markets are reacting as I think most of us would as well.
Yeah, and we're trying to figure out numbers too. William, Section 232, is it 15% or is it 12.5%? What do you know, or what insights would you have there?
Well, I was actually arguing with one of your editors about this over the email, but my understanding is that it's actually 12.5%. So down from 25% down to 12.5%. But the United States also has a 2.5% automotive tariff. So 12.5 plus 2.5 equals 15. That is my best understanding right now, and I certainly there's been plenty of Japanese media that are reporting it as 12.5, not 15 plus 2.5.
12.5.
Okay.
How would we classify that for the auto sector, for example? I mean, are these tariff levels still manageable for this industry, for example? 25% was just painful, but 12.5% still seems pretty high.
I think the automotive, look, I mean, I can't speak for the automotive industry, but my best understanding from my own conversations with industry folks is that while they, I'm sure they don't want to pay 12.5, I still think that they regard it as a significant step forward. Certainly, it makes it a lot easier for Japanese automakers like Mazda as well as Subaru, who are very dependent on the U.S. market and dependent on exports. I think the 12.5 figure is helpful for them, or certainly a significant step forward for them. and I think they will work to find ways to sort of address it. The other thing that I'll point out is that the $550 billion of Japanese investments in the United States, which would vault Japan from #1 in FDI in the United States to clearly #1, head and shoulders #1 in FDI in the United States. My question is, how much of that will also involve automotive investments in the United States? And so I think that also sort of changes the equation in terms of how the Japanese automotive industry will look at these developments.
And William, does that number, 550 billion, does that seem like a new number to you? Is that, in other words, is that fresh out of the oven, or can you imagine a world where that is some way a total of what's been collated so far, and possibly, obviously, fresh investment? In other words, what I'm trying to figure out is that something new?
I believe, well, to be fair, I also don't know myself, right? But I know that Japan is currently $860 billion of investment in the United States. You have the $100 billion from SoftBank in AI. You have the $26 billion from Nippon Steel in U.S. Steel. You have, so I think these investments, along with the again, we're still short on details, the joint venture between the U.S. and Japan in Alaskan LNG. I think these will play a major chunk of the $550 billion, but I think there will be other investments down the line as well. The Ishiba government previously, back in February, talked about raising Japanese investments in the U.S. to $1 trillion. This will easily vault way past that to about, what is it, like 1.4 trillion. So I think these are really all very significant developments, and certainly it's what the White House wanted.
Does this change materially the trade surplus that Japan has with the United States? The White House has, President Trump specifically has called out countries because of that imbalance of trade. We can obsess over the details, but at the end of the day, this has changed that.
Well, I think it does change the trade surplus because, one, by having more Japanese investments in the United States, it bolsters the American trade balance sheet. The other point that I'll raise is that Japanese government as well as Japanese industry have been sort of raising this recently, which is instead of having us pay these tariffs, why not let us use these these tariffs that we would pay as investments in the United States, right? Let's put this would-be tariff monies to use as investments in the United States. Now, I am still short on details of the exact parameters of the $550 billion investment in the United States, but I would suspect that certainly there was some calculation as to why don't we shift it from tariffs into much more productive and growing approaches of investing in the United States. And I think that probably was also helpful in the negotiations as well.
William, thank you so much for that. And apologies that we rushed you in. Thank you for agreeing to that fairly last minute. William Chou there, fantastic context, Deputy Director of the Hudson Institute's Japan chair over in Washington. We are on the Japanese lunch break as far as cash markets go. Futures are still trading, though, and as you can see, we're higher. Following news that, at least reports, rather, to be more specific, in Japan that the Prime Minister is set to announce his resignation by the end of August. Plenty more ahead. This is Bloomberg.
All right, time for our Trending in China segment. Look at what's making headlines in national newspapers and sparking, conversation on social media. The People's Daily has published a commentary looking ahead to the EU-China summit, saying it's a key moment for relations. Let's bring in our China correspondent, Min Lo, to talk us through what's at stake here. We were just talking to James Mager about how tense things are between the two nations. What's likely going to happen?
Yeah, actually, just moments ago, we had that headline. The Chinese Commerce Minister Wang Wentao just coming off a video call with his EU counterpart and lodging solemn representations over the latest EU sanctions over 2 Chinese banks for their role in helping Russia. And this is the first time that Chinese banks are being implicated in these EU sanctions. They were accused of offering cryptocurrency services to Russia, helping Russia to circumvent some of these sanctions. So it looks like, a lot of these sticking points, the 2 main big complaints from the EU has been China's trade practices, what von der Leyen has called the weaponizing of supply chain, and the second thing has been the tacit support of Moscow, right? And it looks like these things continue to remain sticking points and possibly a stalemate here. Just look at the atmosphere so far and look at Chinese Foreign Minister Wang Yi's trip to Europe recently. We have seen how ties soured during the trip because more levies were announced while he was in Europe. And this is a People's Daily article that was published saying that this is a key moment for China-EU ties and saying that this is a chance for a reset. But the choice lies with the EU, whether they want to lean towards China right now or if they want to put some distance with China in order to satisfy the U.S. So yes, those tariffs with the U.S. has provided an opening, but the sticking points still remain, and it looks like the bar is now very, very low for any sort of outcome coming out of this summit.
How impressed do you think investors should be given how low that bar currently is and how fraught with tensions the current links are?
Yeah, so a lot of companies are now trying to circumvent these tariffs by, for example, putting more investments into European plants, right? And we have seen how Chinese investments into the EU over the past 6-7 years has been coming down. But we have also observed how China's investments have shifted as well. They used to do a lot of acquisitions into infrastructure, so things like power grids and ports. They also acquire a lot of companies, whether it's in the tech sector, in the agri-food business sector. But then soon there was all these concerns over national security, over China's strategic intentions, and some of these acquisitions started getting blocked. And then so we see, Chinese investments pulling back over the years, and now they're starting to invest in their own plants in these EU countries, sometimes with local state subsidies. They've also shifted away from some of these big countries like Germany, France, and they've moved towards some of the more friendly countries like Portugal, Spain, Hungary. Just think about Pedro Sanchez, visiting China multiple times, courting actively for Chinese investments. Viktor Orban, one of the most pro-China leaders in the EU, getting rewarded with all these deals from CATL, from BYD, investing in plants there. And so I guess the big question, even Emmanuel Macron also saying that he welcomes Chinese investment, but with a caveat there that competition must be fair. So the question now is, with Germany's new government in place, what is Germany's new China policy going to look like? And that would give us a sense of, the overall tone from the EU in terms of their openness to Chinese investments, and tomorrow's EU-China summit will give us a sense of how relations are going as well.
Okay. Min, thank you so much. Min Lo, our China correspondent. You can read the big context here and all the full big take on your terminal today. If you're a subscriber, you can check it out there on your terminal. If you are not a subscriber of the terminal, but you are a subscriber on the internet, it's also on Bloomberg.com. Right. In other news that we are following this morning, China has suspended its antitrust investigations into the local unit of DuPont. That's ahead of next week's trade talks with the U.S. in Stockholm. Now, the inquiry was among a flurry of countermeasures Beijing announced in early April to hit back against President Trump's so-called reciprocal tariffs on Chinese products. Now, Treasury Secretary Scott Bessent has offered support for Fed Chair Jay Powell a day after calling for an exhaustive review of the central bank's non-core operations. Now, Bessent has told Fox Business that he sees no reason for Powell to step down. The chair has been under fire from President Trump for holding fast on interest rates while facing Republican attacks over a costly renovation of Fed headquarters.
All right, we're checking this NDRC briefing in Beijing. There's so many things going on this morning. This has been going on for much of the past hour here. There's been some news on Hainan. So we're hearing from the Vice Minister of Finance, Yao Ming, speaking at this briefing and talking about expanding the zero-tariff goods to 6,600 items in Hainan. So they're raising the zero-tariff first-tier imports as well to 74% from 21%. So that is quite a substantial jump there. And they are going to begin the custom closure for Hainan on December 18th. So this whole talk of a free trade port is really kind of been sending all these stocks higher this morning too, Dave. Or in the last few days, actually, just in anticipation.
Yeah, and it looks like sell on the news, in fact, today. Maybe, some of those names are actually on the way down. I'm just trying to make more sense of all this taking place. So it's an expansion, as Yvonne is pointing out, of zero-tariff goods. So that's a good thing on the surface. But they're raising the zero tariffs to 74 from 21%. So we'll try and figure this out. Market reaction today specifically, but as Yvonne is pointing out, you have to take a step back to really get a more holistic view of how markets have traded really on this specific news, which is still ongoing. So we'll get you more details on this, of course, later on in the program. We have a couple of minutes left, and we'll see, of course, we get more headlines on that. Plenty more ahead. This is the China Show.
In case you missed it, we're talking about
and why we're breathing heavy.
It's been a long day. The news flow has been quite intense. You take a look at what's been going on in Japan here. So there's a bit of a relief rally underway in the auto sector, but overall, it seems like a pretty broad base on the back of the multiple local news reports now. TBS in the last few seconds saying that the Japanese Prime Minister Ishiba is set to decide on his resignation soon. Mainichi put a time frame on it. By August end. I think Sankei also had August, and according to their sources as well. So it seems like now that we have this U.S.-Japan trade deal, now his future is getting more clear what's going to happen.
Yeah, here's the next thing to worry about for markets, for currency markets specifically, because the Japanese equity market has actually reacted positively to this news. We were trading at about 3% higher. And then the news break, we're now trading at 3.3. And then maybe in the next hour, we'll get something out of this 40-year bond auction to talk about. But yeah, it's been busy in Japan today.
It has, right? And I think, I guess it's no surprise that maybe this could be happening, given the fact that it was a historic setback for the LDP party. And I think it was the trade deal that was the only thing that was leaving him hanging for a little bit longer. And now that we've actually seen a framework, or at least something that is actually quite seen as quite positive for Japan now, is it time now to step down and for new leadership? What does that mean for the LDP party, given just the setback that we saw, right? I mean, when it comes to some of these opposition parties, really catering and maybe even attracting a lot of the local and younger voters. I think they have a lot of soul searching to go for the LDP party moving forward too.
This might actually be good for, if you think about it, for the LDP, if they're able to put someone in that might be able to take that forward on the back of changes taking place there. A look at the Chinese markets going into the lunch break about 30 minutes away. That's it from us. We will see you all tomorrow.